What's going on, everyone? Welcome back to another video. I'm glad to have you here. In this video, I want to give new beginning traders a foundation and some insight on where to start. If you are new to trading and you don't know where to start, this is the video for you, as I'm going to cover some topics, some insight, and how to get you off on the right foot. There is a lot of misconception, a lot of scams out there in the Forex trading space, and I was fortunate enough not to get rolled into that when I first discovered trading. I found a mentor and trading education companies that provided realistic goals, realistic expectations on what trading is. The number one thing I want to just quickly tell you everyone in this video is don't get sucked into people selling you the trading lifestyle. When you see Lamborghinis and Ferraris, yes, that stuff is possible, fancy watches and everything. It's very possible with trading, but that shouldn't be your main focus. You can get there if that's what you want, but you, as a beginner trader, you need to focus on building the most solid understanding and foundation of how the market works before you even think about making money. Trading should be focus and process driven. You need to focus on the process. Money is simply a byproduct of being a good trader. So if your main purpose is to make a lot of money and buy that Lamborghini, you must become very self-aware and become the best trader you can possibly be by not even thinking about the money. And then it sounds funny, but that's the truth. So number one is you must build a solid foundation. You must learn the ins and outs of how the market works. Learn to read a price chart. Learn to read candlesticks, Japanese candlesticks, understand how they work. Learn to read trends in the market, how to identify and spot trends, how to spot trend reversals. Learn how support and resistance, supply and demand works. Learn some indicators and understand basic market dynamics of how the market moves. Then you can start learning price action patterns like double tops, double bottoms, which are reversal points in the market. You can learn triangles, wedges, pennant patterns, stuff like that. Then you can make your way into trading strategies and systems like breakout trading, counter trend trading, support and resistance, range trading. You can start to identify those patterns. And then once you kind of understand that foundation of how all that works, it sounds super easy me explaining it like this, but it's going to take a lot of effort to really understand the market. What you want to do as a beginner trader is focus putting in a lot of work in identifying and going into a price chart and literally just going through historic data, looking at patterns. Don't even think about trading. Just think about identifying market structure, identifying support and resistance, trend lines. How's the market responding to them? Candlesticks, momentum candlesticks. How big is the candlestick? How small is it? Doji candles. They will give you more insight than you can think when you get to that point and you start developing your trading system, or you find a trading system online that you can incorporate into your trading, but that comes later. So understanding the market and how it works, the ins and outs, is your number one step on building that foundation. Now, you're probably asking, where can you learn all this? I always steer people towards Babypips first, because YouTube is full of information and so is Google. If you go on www.babypips.com, it's a free resource. You don't have to pay for it. And you can learn a very basic foundation of all the stuff I just described. As you go forward, I am still in the process of putting together a complete beginner's guide on how to get into Forex. Now, the reason it's taken me so long is because there is so much stuff out there that is all the same. And it's easier for me at the moment, as I've got a lot going on, to point people towards Babypips to build that basic foundation. Going forward, after you build that foundation of understanding price action, how to read the candlesticks, identify trends, maybe start learning some indicators such as moving averages, exponential moving averages, simple moving averages, things like that, the RSI indicator, Bollinger Bands, MACD. Get some insight on how indicators work and why they work and why the market reacts to EMAs or certain indicators, such as the RSI going oversold, overbought, And then maybe look at stuff like divergence. It's a spot in the market where price will react to, and it's great to have that on your chart as well. So once you have your foundation, once you understand a handful of indicators, how and why they work and why the market reacts to them, then you can move into developing a strategy based off all that knowledge you now have. Knowing to spot a trend reversal, knowing to spot a trend in play, and how to take advantage on getting involved in the next move up or down, depending on the overall trend. That is based on a system, a repeatable pattern that has happened in historic data or in the past that will keep happening in the future. And it's up to a trader to capitalize on that repeatable pattern. Discretionary trading isn't something I tell a lot of traders to do, especially if you're a beginner. With a great understanding and foundation of market structure, such as support and resistance, when price approaches a resistance level, you can kind of know it's going to do one or two things. It's going to either range there a little bit until it breaks out and then price may go higher, or it may simply hit the resistance and then fall. It is up to us to identify which one of those probabilities is going to happen more times than not and capitalize on that move. Now you can do that by simple price action patterns. Like I was saying before, if you understand how to read a price chart, if price comes up to a resistance area and you see a doji candle, which is indecision, followed by a bearish strong momentum close, you can simply place a sell order and you can take advantage of the move down, because that signifies the market has hit this resistance area. It's a strong resistance key level in the market, and the market is reacting to it. So you can take advantage of it in taking a short position. Sounds simple in theory, but it's going to take a lot of work to identify these patterns and become confident in putting money on the table and building systems that allow you to take advantage of them. And it really isn't that hard. With the ASFX systems and the system I trades, Austin Silver does. Once you have that whole foundation of reading a price chart, identifying trends, understanding indicators, your next step is literally strategy development or finding a system online that suits you and your personality. That is the most important thing. You need to find a system that suits your risk appetite, your lifestyle. There's no point trading on a 1 minute time frame if you can't dedicate that time. If you work a full job or two jobs, or you have a lot of family commitments, you have a newborn or whatever, it may be hard. But if you are working a 9 to 5, you can get away with day trading lower time frames depending where you live in the world. Now, when it comes to time frames, the best indicator, the best price action patterns, I will just note there is no such thing as something being the best in trading. It's whatever you are able to be consistent with and stick to long term. That's where you're going to generate your money, and that's where you're going to find a lot of success. That's why in the beginning of the video, I said, don't focus on the money. Don't focus on getting rich quick or buying a Lamborghini next week when you open up your trading account, because it's not the reality. It's not the truth. But it can get you there if you're willing to say, like I was saying, to build that solid foundation and understanding and stick with trading long enough. It will definitely pay dividends and really reward yourself in the next two to 5 years. So this brings me on to another tip, and that is take your time. There is no rush. The financial market, especially Forex, isn't going anywhere. So there's no need to, have to start generating as soon as possible. If that is your mindset, you need to take a step back, because you're going to dig yourself a very big hole. You're going to develop psychological patterns and issues that are going to affect your trading long term. Take your time, show up every day, spend an hour a day studying, going through the charts, identifying patterns, understanding the patterns and how they work, and then you'll slowly build up confidence enough to be confident in your trading to progress onto the next element. Once you have all of that, once you have your foundation, once you have your understanding, you are confident enough, you feel inside you that you can look at a price chart, you can at least predict the direction of where price may go or what's going to happen in the market. I'm not big on predicting, I am big on reacting. So if you can react to a price chart, such as EMAs or whatever, and you can kind of predict what may happen, that's when you should be starting to look at a strategy or a system and really start to get serious about maybe opening a demo account, no risk involved. You should be actually starting on a demo account. I wouldn't suggest putting live money in the market just yet. Open up a demo account and start. I wouldn't start just taking trades based off intuition or discretion as a trader just because you know how to read a price chart. I did that in the beginning of my days where I would take a trade on a demo. It just leads you to more complications and psychological issues. You want to have a system. And what I mean by a system is black and white rules to tell you when to enter, where to put your stop loss, and where to take targets, and how to manage your trade as well. The worst thing that can happen to any trader, especially a beginner, and it happens quite often, is the trade goes in your favor. You get really excited, you think you've made it, you're gonna put a deposit on a Lambo, and the trade comes straight back down and stops you out. It leaves you scratching your head, blaming the market as to why you just got stopped out. Unfortunately, that's the truth for a lot of traders. They just simply don't understand trade management. It's not taught a lot. Austin Silver has taught me so much about the financial market and my trading that has made me successful because he focuses on everything I just described. He has a system that's black and white. It tells you when to enter, where to put your stop loss, where to take targets, how to manage your trades, and so much more. The last thing you want is a trade to go in the green and then stop you out. My trading performance has improved because trades do go in the green, but I'm locking my stop loss. I don't want to lose on that trade. Now there's a fine balance between this, locking your stop loss too early, price coming out, stopping you out at break even, and then going in your direction. And once again, we work on this in the AceFX community, improving traders and grading the setups A, B, and C, so we know when to manage these trades and manage them accordingly. So coming back to a system, it needs to be black and white, and it needs to tell you if then. It needs to be like an if then syntax. If this happens in the market, then you do this. If that happened, then you do that. It needs to be rules-based, systematic trading. That is going to be your shortcut and your key to trading success because it removes a lot of discretion. It removes a lot of your gut feeling and your opinions and your emotions. You simply turn up every day consistently at a certain time frame and you follow your trading plan. Plan the trade, trade the plan. And it is simple as that. If you are following a profitable system, such as the AceFX system, there are many profitable systems out there. And if you can follow it consistently, day in, day out, over time, you will come out on top and you will start generating money out of the financial markets. Now, of course, you're going to take losses. Of course, you are going to go through psychological ups and downs. You're going to go through a losing streak or a drawdown. And it is up to us as a trader. And this is the hardest part of any trading, is to manage those emotions, manage ourselves, journal it, come in day after day. And you must remember, a losing streak or a losing trade doesn't make you a bad trader. It's simply the cost of doing business. It's part of the process. So just to recap, build a solid foundation. Go to babypips.com and start learning about the financial market. Learn how to read Japanese candlesticks. Learn the ins and outs. I mean, don't just learn about what they do or how they represent price. Look at the size of the candlesticks. Look at indecision candlesticks, pin bars. Learn about candlestick patterns. Then move on to reading trends, how to define trends, how to spot trend reversals in the market. Then you can move on to price action patterns, double tops, double bottoms, pennants, triangles, wedges, all of those psychological price action patterns. Then you can move into some of the indicators, moving averages, RSI, Bollinger Bands, MACD, all that type of stuff. Get an understanding of how it works, why the market reacts to oversold conditions on the RSI, why the market reacts to the 50 moving average. Look at the candlesticks that form around moving averages, especially the 50 moving average. You'll be very surprised how the market responds to them and how you can take advantage of them. Then move into developing your own system or finding a system online. Open up a demo account and start trading that system. Learn the system, backtest the system, and just before I go on any further, backtesting is what's going to set you aside from a good trader to being the best trader you can be. Just because you find a profitable system with a positive rate of expectancy doesn't mean you are going to trade it profitably. Get the system, learn the system, backtest the system, and then forward test the system on a demo account. You can backtest the system. You are programming your brain to see those repeatable patterns over and over and over again. You are not only just programming your brain to take advantage of those patterns in the live market, you are building confidence. And confidence is the number one key for any trader to execute trades in the live market under that split-second decision, whether you're going to enter or you're not. It removes the emotions, it removes your opinion, and that's what's going to bring you out on top as a professional trader. And that's how you're going to find success. So I hope you guys got some value out of this video. If you did, please smash that thumbs up button. Don't forget to subscribe to my channel and hit that bell icon so you get notified for any future videos I release. I appreciate you guys being here. Drop a comment in the box if you feel like I've missed anything as new traders to begin their journey on the right foot. But once again, I appreciate you all being here, and I'll see you all in the next video.